Oracle stock, ticker symbol ORCL, a database technology company which is down roughly 20% year to date. This stock pays a 1.8% dividend yield with a high 5-year compound annual growth rate. Next to that, they bought back roughly 35% of the shares outstanding in the past 5 years, which is insane. But there are also some negative things attached to this stock. In this video, I'll show you everything you need to know about Oracle. I will show you what they do and I will show you my fundamental analysis to see if ORCL stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analyses every week, where I will tell you everything you need to know about the stock market. So, what does Oracle do? Oracle is a computer technology corporation best known for its software products and services like Java. Through the company's 4 main business segments, cloud and license, hardware and services, Oracle sells its cloud engineering services and systems and database management systems. The revenue can be divided into 4 segments. First segment, and also the biggest, is cloud services and license support, representing roughly 73% of the total revenue. This segment is up roughly 5% versus same quarter last year. The second segment is cloud license and on-premise license, representing 12% of the total revenue and up only 1% versus same quarter last year. Third segment is hardware, representing 8% of the total revenue and down 3% versus last year. Services is the fourth segment and also the smallest, representing only 7% of the total revenue, but this segment is also up 7% versus last year. When we check the revenue by geolocation, we see that USA is by far the biggest in revenue share. Second is EMEA and third is Asia Pacific. USA has also the highest growth year over year, so it's quite obvious that USA is their main revenue stream and also the most important one. Now that we know a bit more about the company Oracle, it's time to check the historical stock price to see how it performed over the past years. Let's start with the 5-year chart where we compare Oracle versus the S&P 500. We see that Oracle has a return of almost 58%, while the S&P 500 had a 68% return. So you would be better off with owning the S&P 500 in the past 5 years. It's the same story on the 1-year chart. Oracle is down almost 9%, while the S&P 500 is only down 2%. On the 1-month chart we see that both are down around 10%. So my conclusion here is that you were better off owning the S&P 500 than investing in Oracle stock. But maybe the future is more brighter for Oracle. So let's check the fundamentals of this company to see if they are a buy right now based on the fundamentals. Oracle is a 188 billion market cap company, and they are within the top 35 largest companies in the US by market cap. They have a current PE ratio of 27, which is quite high in my opinion. In this chart we see the PE ratio over the past years. Most of the time it hovered around the 20, but since late 2021 the PE ratio went up because earnings went down. More on that later in this video. Oracle has a 38% operating margin and an 80% profit margin. Both are fine in my opinion since you want these numbers to be above 10%. Return on assets is sitting at 8.7%, which is too low in my opinion. You want this number to be above 10%. The return on equity is sitting at more than 1000% according to Yahoo Finance. Not sure if this is correct. The 12 trailing month return on invested capital is sitting at 6.9%, which is again too low in my opinion. You want this number also to be above 10%. The 5-year return on invested capital is sitting at 12.3%, which is fine in my opinion. Next up is the income statement. The 12 trailing month revenue is sitting at almost 42 billion and Oracle has a 4.2% revenue growth year over year in the latest quarter. The quarterly earnings growth year over year is sitting at a minus 53%. When we check the revenue growth over the past years, we see that Oracle is a slow growing company with less than 5% revenue growth per quarter year over year. So this is not the highest, in my opinion, for a tech company. When we check the margins, we see that all margins took a big decline recently, which worries me a lot. In my opinion, this is something to keep your eye on because earnings are down as we saw, and this is also one of the reasons why people are selling Oracle stock. Another reason why investors are selling Oracle stock is because of the high amounts of debt. When checking the balance sheet, we see that Oracle has 23 billion in cash and have 78 billion in debt. To me, this is not at a healthy level and also a big red flag. Operating cash flow is sitting at 10 billion and levered free cash flow is sitting at 9 billion. In this chart we see that free cash flow is going up and down a lot and not growing consistently. For me, it's very important to have an increasing free cash flow at a steady pace because free cash flow is used to buy back shares, pay down debt, do acquisitions, pay dividends and all other things. So this is also not a good thing in my opinion. A thing that I do like about this company is the share buyback program. In the past 5 years, Oracle bought back roughly 35% of the total shares outstanding, and this led to a lot of value to the investor. When a company buys back shares, the EPS will go up and your share will become more valuable. Next to that, it's more easier to maintain the dividends and, of course, to increase them. And since we're talking about dividends anyway, Oracle pays a 1.8% dividend yield at an annual payout of $1.28 a share. The payout ratio is sitting at only 26%, which is fine in my opinion. They have almost 75% left in cash for all other things, such as pay down debt, buy back shares, do acquisitions, and so on. In my opinion, they should use this money to pay down the debt and buy back shares. The 5-year compound annual growth rate is sitting at almost 15%, and they grew the dividends for 9 years in a row. To me, this is looking really good from a dividend perspective. My final conclusion is that I got a mixed feeling about this company. It's growing at a slow pace and also with a high current PE ratio. Margins are okay right now, but they took a big decline in the past year. Next to that, the debt is also at a high level and they are only capable of paying down a small piece of this debt. But on the other hand, I do like the dividends and the share buyback program. From a dividend perspective, I think it's a nice stock. But when you want to invest to beat the market, I think there are better deals in the market right now. Right now, I think it depends on what your goal is. For me, Oracle is not a buy at these prices and fundamentals. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.